according to an election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Fingers to the down.
All right, ladies and gentlemen, I got your watch list coming in on March 2nd, 2022, and wheat stock is gonna go crazy. WEAT. I might have to say this is the play of the month, but everything went crazy today. Oil, commodities, we got some big news. It does kind of have to do with the Russia-Ukraine situation, but at the end of the day now, it is going to be the focus of the Fed. And why is that important? Because we got Jerome Powell tomorrow. So, we got a lot to talk about. I'm going to go over everything that happened in the market today. I'm going to give you some fun facts about wheat. We'll go over the play and why I'm liking it here. Then we got to talk about everything from what Joe Biden is going to say, the events that we had with the global tensions, what happened with oil and commodities, and then what we are expecting for the rest of the week. So, drop your thumbs up on the video and make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, and big shout out if you've been showing love, baby. God bless you. But as far as today, I'm actually going to start with the pretty picture here. Just one thing to keep in mind, every index was down about 2%, or we closed right around there, but now this is the worst start that we have had since 2009. It is March 1st right now. Tomorrow's March 2nd. This blue line here is 2020. The only other time we were worse was, again, 2009. So just to give you an idea of everything, the markets still aren't looking hot, and a lot of people are asking now, what is the next step? In everything from Russia and Ukraine all the way down to the Fed, it is bringing in a lot of uncertainty. But as far as what happened today, it was essentially a continuation from yesterday, except there was no good news. And if you think about what happened yesterday, we pretty much had a lot of bad news, but then we opened up, well, maybe there was going to be those Russian peace talks. Well, today, the Ukrainian side pretty much said that nothing came out of it, so that was negative. And even though the rate hike odds dropped and that was bullish, the real big concern right now, and this is why that wheat play is so important, even on some of the oil plays that we have, but it would all have to do with oil right now because oil went absolutely insane. The massive run-up that we got in oil today, it came after we announced the SPR release, and I do have some details on it, but you could really see it here quite easily. This is CL, and this little sliver right here, this was when the news came out that we were dumping more oil from the reserves. Again, you would traditionally think that would lower the price, but now on the second time, and then with everything going on, it literally made oil surge. We topped out at like 107 at one point. Even Brent crude, essentially now, the spread between WTI and Brent, it has lowered a little bit. It has simmered down, but oil went crazy. Every single commodity, even Alcoa, they hit one of their biggest highs since 2009, and I believe commodities have actually hit the highest point since 2009. So S&P is not as bad as there, but the commodities are hitting that same pace. But that was part of it, and we've been talking about it, and essentially now with commodity prices and oil going up in the midst of all of this, this is bringing about a lot of questions about the Fed and pretty much what is going to happen. So given that we have Powell, we have a couple of more things to talk about with there, but now I got to jump to your second pretty picture here, and this is the chart for wheat and what this is showing you, and this is now why I am liking the play a little bit more here. One, a lot of people didn't talk about it. I know we were talking about that yesterday. Pretty much Reddit has gone after Ukrainian war bonds for 11%, so I'd like the fact that this thing isn't as crowded, but now with the futures and everything else, I mean, they were talking about it all day. The secret is out. Everybody knows about it. And now the futures on wheat for 1 year, the spread is the largest that it has been in the last 30 years. And now why this is important, it's a good historical signal, but now we are getting to understand the situation a little bit better, because the downside that I'm worried about with the wheat play is the fact that wheat is in high abundance. It is easy to get. The supply is very high. It is not like oil. So if supply did hit the market, it could quickly go down. But now a lot of people are talking about it's not really the harvest. And if you go look at any other historical pop on wheat, you'll notice it had to do with the harvest and the weather. This time around, it is a little bit different, but now one of the big problems here, it is the shipping cost and the logistics and all of that, and now it's giving us an idea pretty much if the futures stay elevated like this, it is looking like next year is when people expect wheat to calm down, or that is when they expect the supply to return back to normal. So we're going to keep watching the futures. We'll see how this changes, but what you saw today with wheat, it was crazy, but it was not just them. It was every single commodity, and this is now pointing to some bigger effects. So coming into the rest of the week and even today, you are going to be getting the State of the Union. I do have an update on what is going to be said. I'm not expecting it to be too big of an event, but Powell tomorrow, that is probably going to be the big focus, and it really depends on what level of escalation, de-escalation in Russia that we see. But like we've talked about this whole week, we're going to watch things develop little by little, and that is simply because the situation has gotten to a point where there is no easy off-ramp. There's not going to be a magic bullet or an announcement that will get us fully recovered, because we still have to deal with all of the repercussions, and then you still have to factor in the Fed. But now with what you're seeing here in the market, this is how it might look over the next few days, or again, working itself out. What we saw yesterday, remember, we came down, we watched that level of 430, it didn't break it. Then today, we broke it a little bit. Again, the swings are pretty decently sized, but then we broke that, went down to the next level from everything else we were dealing with on that Thursday, Friday bounce, and now it's just little by little. So still a lot of volatility, but we haven't gotten some of those full liquidation moves, and that's where I think people are waiting, and we're looking at all of these factors. And again, Powell tomorrow is going to be a big one, but now we've talked about this a couple times, and it relates to the catalyst tomorrow. He is going to be speaking before Congress, and why it is going to be so big. He's going to talk about inflation, he's going to talk about their moves, but now the fact that you're getting these big moves in commodities, if it gets worse and worse and oil keeps going higher and higher, that's pointing at more of that data giving bad data for the Fed, and now it's going to put them in a weird situation where they are going to have to start raising rates and maybe aggressive when you don't want to be aggressive when the market's freaking out to global tensions. So it puts them in a very tight spot, but like we said at the beginning of the week, it may start shifting us to a more moderate or severe reaction in terms of the worst case scenario dealing with everything going on. So coming into the company news and events, I got a recap of some of the more important news that we got as far as the whole Russia-Ukraine thing. But the first one, the EU said they will be banning 7 Russian banks from the SWIFT messaging system, but they did leave some of the bigger Russian banks, or the biggest bank, open, and that is the bank that deals with a lot of the oil transactions. So there was that, and one thing you got to keep in mind, it will take 10 days for these sanctions to come into play, so there is a little bit of a delayed response. And on top of that, Canada and a few other people did say that they are expecting to have more sanctions against Russia in the next few days. So there was that, and then the big piece of oil news, and it literally just lit a fuse on the price of oil. But the IEA, they announced that they're going to be deploying the emergency oil reserves. The amount is 60 million barrels, and now half of that is coming from America. We are doing 30 million barrels, and then everybody else, the coordinated effort of everybody who's down, they are going to contribute the remaining 30 million barrels. So there was that, and now as far as the State of the Union, it's going to be at 6. I might stream it, I might not. Follow me on Instagram at the Trading Fraternity. I'll give you guys an announcement there, but you already got a pre-written script already, and we kind of know what he's going to say. He already said, or this is what he's going to say, Biden said that Putin bet wrong on splitting allies and that we were ready, and he said that dictators must pay their price for their aggression. He was going into a lot of the Russia stuff, but then he calls on Congress to address inflation, boost U.S. manufacturing and clean energy, and he is also planning now to unveil a new economic plan. He says that instead of bringing down wages and hurting that, they could have a new economic plan and create jobs and fix the scenario. So this is what they released in the pre-written statements. We'll see how it plays out, but that is going to be happening 9 p.m. Eastern, 6 p.m. Pacific time. And again, I don't think it's going to be a big event for markets, but who knows? But there was that, and then Apple, this was actually pretty big news, but they announced that they are stopping all exports to Russia and selling products over there. And then you also had Ford. They told their JV partners that they're suspending operations in Russia, and then even Nike, they said they will no longer service sales in that region. So a lot of these updates with companies, but now Apple, that was a very big deal, and you even saw the stock respond, but it was kind of during the sell-off there towards the end of the day. But there was that, and then like we said, you got a new record being set here, but commodities have now jumped the most since 2009. And again, stock market was not good there. We'll see what happens, and we'll see if things cool down. But what people are worried about, whether it's the Fed, the war, if any of this starts to spark this second wave of inflation, and now without any tightening or anything, it could get a little awkward. But there was that, and like we said, this is why I like wheat. But now there is a big thing. This is the one getting coverage. Apparently, Redditors are going for Ukraine war bonds, and it's being touted as a way to do something positive with your savings. That's what they're saying. There's a whole article on it. No mention of wheat, and I was excited about that. But they're saying how a lot of people are looking to take the 11% risk, and they feel like it's like activist investing, more or less. But pretty straightforward. Our work is cut out for us. Again, we have a big catalyst with Powell tomorrow. We got to keep our eye on oil and everything else, and depending on how things go, people are going to start forecasting for the Fed in a week or two, and that is really going to lay the groundwork coming into the second quarter. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I got 3 stocks that I'm looking at coming into tomorrow, and we did make a long-term play, so we'll go over that. And if you didn't get an alert, first link, we got free long-term alerts, and yes, we are still buying for the long term, and we are acting as if we cannot change our mind for 10 years, and time in the market beats time in the market every day. But we'll talk about that. As far as the first play, like I said, it's going to be wheat. I think it's going to go crazy. I think for the very least over the next month, I can confidently say, or to a degree, again, the thing is, wheat could really get dumped, but I'm really thinking this may be the play of the month for the most part. But the one thing I'm looking at for, and why I'm even telling you this, is essentially with the information we got today, again, confirming a big historical spread over 30 years, but that gives us a timeline for 1 year. I now have my strategy laid out. Why? Because I bought in a couple days ago. We got a very good price. So that was yesterday. It was a very good price. We're already up like 150%, but now I want to double dip, and this is what I'm saying. Wait for the second entry, and this is where I'm going to be looking at it, because I do believe it's going to be volatile. But now, if this backwardation continues, people are worried about this supply over the next 12 months, essentially. I want to start aiming for some of the short terms and then see how some of those play out off of the dips, because those will be the most volatile. So, as far as the play, this is the wheat one. We have October's. Again, we got a lot of time, and this is very helpful, but now, given the situation, in a weird way, these short terms are going to be a little bit more attractive, or you will see the future prices go up. But now, here's the complexity of this. You own a fund, so the thing about WEAT is that it has a little bit of diversification amongst the contracts that they are holding. So that's what I thought was interesting about it. But these are the ones I'm holding. Again, they're already up a decent amount. If they do come down, I think they will hold a level. But I like the April ones, maybe even the March, but it depends on the speed and velocity we get, because I am worried if, again, things cool down, or if that's the down streak and it matches up with March and we get clapped. But April is what I'm going to be looking at. I want to see if they add any more options to the chain, or at the very least, I am going to be buying the shares of this, or even looking at the futures. But holding this play, riding it out, I have 100 contracts on the Octobers, and what I am going to be waiting for now is my double dip. But I'm probably going to ride those plays for a little bit, and I don't really plan on taking profits anytime soon, so we will see what happens. But that is the first play. Coming into the second play, I got 2 paired up here because I like both of them, but I feel like I'm a little bit late. And even with all of this, I hope you guys can see with the volatility, you could kind of get a couple of steps ahead. I'm going to be watching these stocks every single day, but like I'm saying, I'm kind of preparing myself for a little bit of a delayed reaction news where I could kind of play it a couple days later and let it kind of do its thing and come down. But both BITO and TSM, they're kind of related to this situation, but both of them have made moves. BITO options are a lot higher even from yesterday, and I thought they were expensive yesterday. And then TSM, I think they have a little bit more exposure now, and we're going to see if they continue that downside. But both of those BITO calls are expensive. TSM puts are expensive, so I want to be able to play these, but now I need to wait for the second leg. I want to try to use these slow moves and volatility to my advantage, because you've seen how the market has been playing out, and at the very least, we know we got about 2 weeks till the Fed, and then depending on whatever else happens with oil, Putin, or anything else that happens. But gonna be watching those. I like both of them. I don't have a play on any of those two, so gonna be keeping my watch. And then finally, JP Morgan. I got it for the the long term, baby. So it meets the criteria. It's a value stock, has a good dividend. Yield is not too high. It's also a name brand stock. And then best of all, it's not the best performing bank. It's not the worst performing bank. And they're at their 2020 levels. So I like it. I still have a little bit more of my deposit left. So best part is, even with this month, since we saved a little bit of cash, depending on how things move, I could even go for a growth name, or I could decide to buy more or even get one of the REITs that I was talking about. So I like it. And one top of it, not related to the long term, but I'm down with it. But even in the short term now, I am going to be watching JP Morgan and any of the banks, because things do start to recover, or we do kind of reach a breaking point until oil and everything else stops, essentially. I do think financials will start recovering first, so I want to keep a close eye on them. But as far as what we bought and how much, I bought 15 in the big account of JP Morgan at 137.37. They were down like 3 point something on the day. They did slip as much as 5, but they came back a little bit. Then I got 2 on the YouTube account, and then I got 2 on Colt Sister. Again, about 137.30 cents is about the price. They went down a little bit, and like we said, we got a little bit of the deposit. And if you didn't get the text, make sure you sign up. And if you did sign up and didn't get it, make sure you enable short codes with your phone provider. But there was that. Those were the main plays. As far as everything else, I did make a couple of plays, and I took profits on some. The first one was Alcoa. If you remember, we got these last week, and we were talking about it again. We were positioned pretty nice, and this one was crazy because I sold out. I had about 50 of these contracts, and I got them super cheap, so they went up 100%, around like 19-20 cents. I sold 30 out of 50. I had 20 left, and then they went to 50 or 60 cents, and this one was absolutely insane, and that was because Alcoa did hit a record high, literally almost a decade high at this point, so that was really good. They came down. The contracts are there. We got a little bit of time. I'm going to be holding the remaining ones. Again, they're already free, and then we get to play during the middle of all of that, so keep your eye out for that. That was the first play, and then even the RTX. Remember, I rolled over the Lockheed Martins. I made those free, but these plays kept going up, and they were at $1, so I had 11 of them. I sold out like 5 or 6 of them. I think I sold out 5, got my initial investment plus profit back, and just made them double free and took profits there. And then I made 2 quick plays, or 3 throughout the day. Again, we were looking at a couple of things, so I decided to go for a Boeing. There it is, but we grabbed this throughout. And again, remember, I had those old Boeing weeklies. They expired this week, so they're still down, and I wanted to hold them. Remember, I've been looking at Boeing as a potential sanction target, if anything. And again, out of any of the defensive, they have not done good. So I grabbed another $60 play. They went up about 50% or a little bit more by the end of the day. And then I did the same thing with an Apple play here for the 130 puts. I only grabbed 2 of them. Even with that Boeing, I only grabbed one $60. Again, I got like 3 of these, 75 bucks on a shorter term play, keeping it very small. And then I also made a UNH play there at the close. I grabbed one of the weeklies or the next weeks, and I got them for a quarter, and it was just because MOH at the close and even UNH, they were going crazy. So I might get scammed on that $50. I also went for a Kohl's in the morning, and they went up a little bit. I grabbed 4 of these contracts at 13 cents. They went up to 30. I should have sold out of them. They even held up pretty good, but then they got clapped throughout the volatility for the rest of the day. But again, a bunch of other smaller plays, and got to take profits on the bigger ones. But those were the main plays. As far as everything else, I'm going to be watching WEAT. Again, really liking this play. Boeing, like we said. XOM, I forgot, I also took profits on those weeklies. And remember, we were down on those, but I was able to sell out for around 60%. Then they went up as much as 200%, but I kept 1 contract remaining. But going to be watching XOM and all those companies. Even Airbnb, they did good today. I think it was off of offering the houses. Again, you even had a Chesky on Bloomberg TV talking about it, so a lot of people were behind it and donating, so that was pretty cool. And then UNH, just a little weird end of the day move, but maybe keep an eye out on healthcare. And then B&O, those option plays we had, they went up 50, but Brent, the spread is tightened, like we said, between WTI. I'm expecting them to go a little bit crazy, so still liking it. Just going to keep watch on that, and we're going to see how to play it. If anything, I might trim some, but I do want to kind of ride this play out, especially with the reaction that we saw. And then even LMT, they absolutely killed it again. Going to be keeping double watch. I wish we kind of kept the rollover, but RTX did underperform a little bit, but we are still in a good position nonetheless. But watch out for them. And then Beto, like we said, and then gold. This one, even in the Beto TSM category, I would want to get some, but it's hard to move it off these pops, and the volatility gets crazy. So just be careful of the premium and how they move. It's kind of like LMT was last week, so watch out for that. And then NTR, notice this one went red. This is like a fertilizer play, kind of related to the wheat stuff, but this one could be in the whole mix of all of that. So keep your eye out for them. It was a great shout out there on the chat, and I think these ones you can watch them, but again, premium after these runs is going to be the difficult part of the equation. Then finally, watch the Uvxy. It's going to be important to see if we break out. Again, it's kind of like the gold chart to agree, but this is telling you something, especially the VIX gets higher than where we were at the January 24th. Again, that was a lot quicker and bigger fear, but sustained Uvxy staying up, that is very important, so keep your eye out for that. Bonds, the one thing I want to show you is that the divergence is closing, and honestly, it looks like it might kind of converge at like 420-ish, or even like 418-ish, but I wouldn't be surprised. But keep your eye out for this. We're going to be watching, again, what Powell says and everything else, but bonds are getting a safe haven. You're watching the stocks come down. We really got to see if they match up, but at the end of the day, Powell's words and what Powell does in 2 weeks, that is really going to let us know, okay, should we really be worried about worst case or not? And I'm sure the bonds are going to tell us, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, have no fear. But the code loves you, all of you. I'll see you in the morning. Let's go.